Tonight on Market Call, we have David Burrows. He is President and Chief Investment Strategist at Barometer Capital Management. He'll be taking your questions on North American large caps. Hello there, I'm Jamison Burko. Welcome to Market Call tonight. The phone lines are now open. Pick up the phone and dial if you want some free financial advice. 1-855-326-6266 is how to get a hold of us. If you want to do it the new-fashioned way, you can send us an email at marketcall@bnn.ca, or you can tweet us. All the kids are doing it. It's at Market Call, but nobody likes to wait in line. If you want to skip the queue, send us your video questions. Film a quick question on your smartphone or tablet. Not only will you get to the front of the line with your question, you also might be in the running for a pretty fancy BNN mug. They're deep, they're plentiful, folks, but they're going fast, so you want to get those video questions in right away. David Burrows sporting one of those mugs right there. It's a delightful treat, but you had to work pretty hard to get yours. We just came off the worst trading day in North America since the U.S. presidential inauguration. Is this a trend? Should markets open tomorrow negatively and then negatively, or is this just a bit of a blip?
You know, look, we're in a bull market. When corrections do come in bull markets, they're swift. They can be painful for a few days, but they're over generally pretty quickly. You know, people have made a big deal about the fact that we haven't had a 1% down move in 100 and some odd days. And actually, if you went back and looked at history, this has happened about 10 times over the last 30 years. And the returns that came 3 months, 6 months, 9 months, 12 months afterwards were way above average. When you have long periods of time where volatility's been low, as it has been, eventually when you have that 1% day, it tends to be, this is a shakeout. So there's lots of nervous holders right now. Lots of people all over the internet talking about, you know, is market making an all-time high and is it done? And the reality is that the most difficult thing in a bull market is to stay positioned. I'm the strategist at Barometer. My job is to understand the market environment and then build portfolios based on those views. And I would say from a whole bunch of different angles, market continues to look very constructive, and you know it would be healthy to have a few sloppy days. But the key themes that are in place in this market are firmly in place. And I don't see any end to them in the near term.
But as you know better than most, you know, sentiment always plays a bigger role than people tend to expect. And you brought up an interesting point just now, this idea of there being a lot of nervous holders out there. I mean, to what extent might a correction be something of a self-fulfilling prophecy? People see a trading day like today, maybe a couple other messy days, and they just hit that sell button over and over and over, and you know, we see that domino effect.
So that's a great question, but you know, bull markets don't end with skepticism. They end with optimism and euphoria. And realistically, when you look at things, in Canada, about 50% of stocks are in long-term positive uptrends. That has been slowly rising. In the US, it's about 66% of stocks in long-term uptrends. And in the last 2 months, while the market's been treading water, the average hedge fund's gone from 110 to 115% long to 80% long.
Okay.
So there's been tremendous profit taking over the last 2 months, but it tells you how strong the bid is under the market because there's been really no downside.
Right, no one's even noticed.
Right. So that tells you that there's a very firm bid under this market. When there's low volatility, there's a very, very firm bid. Now, you should get a couple of shaky days. That would be a good thing to shake out, you know, some sort of loose holders. But the reality is, I think the underpinnings of this market are very, very good. And you know, I wouldn't get wound up about a few days of sloppiness. That would actually create some opportunity. There's a lot of people that are underinvested in this market. So
what would you be watching for then for any sort of sign that perhaps the market is losing steam and we might see a bit more of a sustained correction?
Right. So I run a breadth-based model that tracks the percentage of securities in a universe that are performing well. So long as that breadth is expanding, that means money is getting put to work. And so I watch very closely for signs of deterioration. Now, there's sectors within the market that are in difficulty, right? After a pretty good rally off the lows in January, February of last year, Energy really has run out of gas and is in some difficulty. Metals and mining, some of the resources are in some difficulty. Some of the consumer sectors, some of the defensive sectors have been in some difficulty. But we're in a market where correlation, the degree to which stocks are behaving the same, is very low, meaning there's some groups that look great and some groups that don't look as good. So you want to focus on those groups that look like they have some underlying strength and be prepared to buy some of the leading securities on any pullbacks.
You've raised, I think, another 25 questions that I have for you, David, but I will be polite and respectful to the fact that you folks at home are definitely eager and waiting with your questions. So we're going to take a quick break. I had my chance. Now it's going to be your turn. We'll be right back with David Burrows. Remember, he is Chief Investment Strategist and President at Barometer Capital Management, answering your questions about North American large caps. Pick up the phone and dial 1-855-326-6266. Please stick around.